Is there an AI bubble? Yeah, probably. But the biggest losers won't be the people who stay on the sidelines. It'll be the people who invest in the wrong AI stocks. While everyone is screaming bubble, OpenAI is planning to spend over $1 trillion on infrastructure. Google is pouring tens of billions into powering Gemini. The real party isn't in the hype, it's in the pipelines. By the end of this video, you'll know exactly which AI stocks to avoid, which ones to focus on, and how to ride this massive wave without blowing up your account. Let's get one thing straight. AI is no longer a cute experiment. We're talking about OpenAI wanting to spend more than $1 trillion over the next decade on chips, cloud, and data centers. They're working with giants like Microsoft, Oracle, Nvidia, AMD, and Amazon. To keep Gemini competitive, Google is looking at around $75 to $85 billion in AI and cloud spending in a single year, after already dropping tens of billions. Microsoft, Amazon, Meta, and Alphabet combined, they're lining up well over $200 billion just for data centers and AI capacity. This is an arms race. The real question is, are you trying to bet on the bullets, or are you smart enough to own the companies selling the guns? Before we get to the winners, let's talk about the traps. When people say AI bubble, they don't mean AI is fake. They mean that some stock prices have completely detached from reality. You know the type. Tiny companies that just added AI to their name last year, have no real profits, and a stock chart that looks like a meme coin. When the hype is high, they skyrocket. When the mood shifts, they collapse. It's already happening. We've seen AI names rip higher on pure hype and then crash the moment investors remembered to look at the numbers. During the dot-com era, thousands of internet stocks just evaporated, but the real businesses survived and went on to dominate the next 20 years. The same script is playing out right now, just with AI in the title. Here's your first major takeaway. If the entire argument for a stock is, this could be the next OpenAI, or this is the next Google of AI, you should probably just close the tab. You can't buy OpenAI stock directly, but you can buy the companies OpenAI is paying hundreds of billions of dollars to. You can't buy Gemini as a stock, but you can buy the infrastructure that makes Gemini possible. Chasing tiny, speculative AI plays because they feel early is how most retail investors get wiped out in bubbles. You're not here to collect lottery tickets. You're here to own the casinos. So, which AI stocks should you be scared of? First, the microcap AI stories with no profits and ridiculous valuations. If they talk more about revolutionizing the future of intelligence than about their actual revenue, margins, and customers, that's a huge red flag. Second, the pure narrative plays where the valuation assumes everything will go perfectly, forever. Some software companies are trading at insane multiples just because they sprinkle the word AI in every presentation, but their earnings still need to catch up in a massive way. Once the market gets tired of promises, these are the first stocks to get punished. Here's a simple test. If a 30-second look at their financials makes you go, wait, that's it, then that's not where you park long-term money. Now let's flip the script and talk about where the real opportunity is. Every single time you open ChatGPT, every time someone asks Gemini a question, somewhere in the world, a ridiculous amount of computing power, storage, networking, and electricity is being used. OpenAI's $1 trillion plus infrastructure plan is being sliced up across chip makers, cloud providers, and data center operators. Google AS push for Gemini is backed by tens of billions in capital expenditures to upgrade servers and build new facilities. Microsoft and Amazon are in the same war, racing to build bigger, faster AI cloud platforms. That money doesn't just disappear into thin air. It shows up as revenue and profit for very specific companies. This is where AI infrastructure stocks come into play. Think about GPU manufacturers like Nvidia and AMD. Think about the foundries like TSMC that physically produce these advanced chips. Think about the server and data center hardware players, the networking companies that make high-speed connections possible, and the big cloud providers that are monetizing all of this demand. When analysts build lists of real AI stocks, These are the names that show up again and again. Why? Because they sit exactly where all that spending from OpenAI, Gemini, Microsoft, Amazon, and Meta hits the real economy. If OpenAI commits hundreds of billions to GPU capacity and custom chips, guess who benefits? The companies designing, manufacturing, and hosting that hardware at scale. So pause for a second and ask yourself this. Is your portfolio more exposed to the shiny front-end AI apps or to the backbone that everybody has to pay for? The front-end apps can change. Today, you use ChatGPT. Tomorrow, it might be Gemini. And next week, something completely new. But all of them need chips, servers, data centers, and networks. In every gold rush, there were thousands of prospectors digging for gold, but there were only a few companies selling the picks, shovels, and railroads. The prospectors came and went. The infrastructure companies got rich. Let's make this really practical. When you're looking at AI stocks, you can use a simple 3-step checklist that works even if you're not a finance expert. Step 1. Follow the earnings, not just the hype. Are revenues and profits actually growing strongly, like we see with the biggest AI infrastructure players? Or is it all just talk? If a company keeps shouting, AI, but can it show meaningful growth in its cash flow, you need to be careful. Step 2. Check for valuation sanity. Are you paying a premium for a company with real dominance in its field? Or are you paying a fantasy price for a maybe? Even the most amazing businesses can be terrible investments if you buy them after a massive price spike at insane multiples. And step 3, run the AI winter test. Imagine that the excitement around AI cools down, growth slows, regulators step in, and the market gets nervous. Does this company still have a durable business model? Or does everything collapse because the only thing they were selling was the story? Infrastructure providers that are locked into multi-year contracts, that are embedded deep in data center build-outs, and that are essential to big tech SAI plans have a much better shot at surviving whatever comes next. If the honest answer to what happens if the AI hype fades is this stock goes to zero, then that is not an investment. That's a gamble. Here's the real mindset shift you need to make. You are not trying to predict whether the AI bubble will pop next month or next year. Even the experts can't time that. What you can do is position yourself so that, bubble or not, you own pieces of the companies that will matter in the long run. You don't need 15 random AI tickers in your portfolio. You probably just need 2 or 3 high-quality names that sit directly in the flow of this historic spending wave. Core chips, core cloud, core infrastructure. When Alphabet boosts its AI spending, when OpenAI announces another monster data center project, when Microsoft signs new multi-billion-dollar AI contracts, you want to be holding the suppliers, not just chasing the headlines. Volatility is part of this game. The same AI leaders that exploded in 2024 also saw sharp pullbacks whenever headlines screamed bubble. That's normal. In the short term, the market is a popularity contest, but in the long term, it's an earnings scoreboard. If you build your AI exposure around real earnings, real contracts, and real infrastructure, those dips become opportunities to add to your position, not signals to panic and sell. The goal isn't to look smart in 1 month. The goal is to be right in 10 years. So here's your choice, and it's a simple one. You can spend the next decade watching OpenAI, Google Gemini, Microsoft, and Amazon pour hundreds of billions of dollars into AI while you stand on the sidelines, telling yourself it's all a bubble, or you can level up. You can avoid the obvious junk, focus on the companies that actually get paid when AI runs, and use the bubble narrative as a filter instead of an excuse. The real risk is not that AI stocks are in a bubble. The real risk is waking up in 2035 and realizing you watched the biggest tech build out in history from the sidelines because you were too scared to learn how to play. If this shifted how you think about AI investing, don't just scroll away. Bookmark this mindset. Start by picking 2 or 3 serious AI infrastructure names. Dig into their earnings, their contracts, and their role in this big tech arms race. Build a plan you can stick with through the volatility. The AI wave is here, whether you like it or not. The only real question is, are you going to get crushed by the bubble, or are you finally going to learn how to surf it? Thanks for watching, and don't forget to subscribe for more.